Hello traders, Gary Wagner here, just after 11 o'clock in Honolulu, 5 o'clock in New York on Friday. Happy Aloha Friday, as we say on the islands. It is the 5th day of September 2014, and this is the daily report for gold and silver, our weekend review. And we're going to end the week on an up note in terms of the precious metals, closing down off of the week. First to gold, current print, $12.6851, puts it up between $7 and $8 on the day. A nice showing, low of $12.6170, the high $12.75, and as I said, current $12.6851. Silver also trading higher on the day, up around 13 cents and trading above $19. The low $18.93, the high $19.33. More on silver in a little bit. So traders, there's no doubt, even though we are closing higher today, $7, $8 on the upside, you can see that with this one green candle right here. We'll talk about the significance of 1261 in a second, but we are absolutely closing lower on the week. It's really all in Tuesday's action. You can see this large red candle. It breaks below a 61% retracement. Now this retracement is of this $100 rally here, and so once we saw the market find a bottom and then move up off of that, our hope was that we would see this 1280 become support. That was not to be. Of course, Tuesday's dramatic action following a 3-day Labor Day weekend. Of course, this was a shortened week. We saw the price of precious metals absolutely plummet as they move down. But interestingly enough, we have identified this level here, which is 1261. Now, 1261 is of this $200 rally here. We don't have quite all of it in there. It begins at the end of last year, beginning of this year is when we really see that market move up. And we have seen this market find some support here. Now, interestingly enough, when we saw the market break below 1280, it also broke below our compression triangle. We didn't really get the kind of release that we would traditionally see because we really didn't get any follow through. If you look at the activity on our daily chart, you have a tremendously hard down day followed by a very, very small up day, followed by a minor down day yesterday, and then a minor up day when you compare it to Tuesday, of course, pretty much gaining back the market losses of Thursday on Friday. So where does that leave us and how are we looking at this market? Well, the first thing that we have to acknowledge is Tuesday's action absolutely broke us below this long-standing support line. And of course, this support line is simply created by looking at the low that we had at the beginning of the first rally of this year and the low created on the second rally of this year, extending that line up. And when we do that, the first thing that we see is that I believe that this is our potential resistance area now. This particular line here itself is resistance, and of course 1280 is resistance in the market. Now, we currently have some support at 1261, and I find that interesting. The question is will this support area hold throughout the week and we'll see the market meander back in? If that is the case, then we have a scenario that's quite different than if we see the market break below this. Because if it does break below this long-standing 61% retracement, realize that that was created back in December through March of this year. If we do see a break below there, we really, as I said on the chart, this series that we just sent out to you about an hour and a half ago, we really have nowhere to go but possibly even test this particular support level at around 1240. Also, if you recall, over the last couple of weeks, my sense was that if it holds this particular area, meaning the 61% retracement, 1261 is the number, then we are still looking at a scenario in which when we look at a distance at the most recent series of lows, we can make a case for a low, higher low, higher low. But what we have to put into alignment with this is that these series of higher lows have absolutely categorically not seen any higher highs. In other words, A market that is trending higher will have a stair-step manner, but it will move up, it will retrace, but then when it moves up again, it will always take out that previous high. That is what a market in a rally mode does. It makes new highs. It has higher highs and higher lows. So we've noted that we've only been seeing one half of the equation in terms of a bullish market move up. But in terms of a bearish market move down, that category has got to be really characterized by a series of lower highs but lower lows. So what we get is we get a continuation of this market compressing, even though it broke below our long-standing support line. You know, traders, this has been all about the dollar as well as the equities markets. Now, we did have the dollar come off of the highs. The equities markets, however, did rage to new record territory today. S&P moving higher, Dow Jones moving higher on the day. So my sense is right now that what we really have to follow and look at, because gold is taking its lead from the dollar and from the equities markets, is whether or not we're seeing any kind of top action activity in the equities or the dollar, or we will continue to see those markets move higher. Because obviously our sense is that if the equities continue to run and the dollar continues to run to the upside, we're going to see continued pressure in the precious metals market. The reciprocal is also true. In other words, if we're able to see some weakness in the equities or the dollar, we should see gold begin to recoup and move higher. However, as of this moment, we have a very, very strong equities markets and the dollar continues to roar. Silver, interestingly enough, has found some support at $19 per ounce. We've got an engulfing bullish in terms of the candlestick pattern, but in terms of really looking at a technical area where this kind of makes sense, in other words, what we're looking at, the only thing that we can really look at in terms of a level of support is this particular bottom here does match to our current market bottom. And so what we'll have to see is if we see some sort of follow through and a continuation, of course, of this particular support level holding. This has been Gary Wagner, wishing you as always good trading. We will talk to you on Monday for another daily update and review. Bye-bye.